Sage here for Kalkine Media. Please subscribe to the channel and press the bell icon to be notified of our latest videos. In today's trending topic, we are going to look at what is BNPL and why is it important. The Buy Now Pay Later BNPL is an age-old concept revived in a trendy way by the fintech companies across the world. And to put it simply, it means a customer taking home their purchase but paying for it on a later date. In BNPL, a customer buys the product and commits to pay for it later. Until that time, it is interest-free. If he misses that date, he is supposed to pay the interest for the entire period. And suppose Mr. X, an imaginary person, buys an iPhone on the 31st of March 2021. He commits to pay for it by May 31st. If he pays before May 31st, this would be an interest-free purchase for him. If he pays later than May 31st, he would have to pay the interest for April and May as well, and along with interest for the days he delayed his payment. After the COVID-19 pandemic set in, the finances of middle class got messed up, and with this there was transformation in the way the people spent their money. Fintech firms started coming up with more and more BNPL setups. According to various surveys, the BNPL apps in the market have seen the number of their monthly active users soar by 186% year over year in 2021. In the same period, the number of apps installed rose by 46% year on year. Experts suggest that the value of global BNPL transactions is set to surge past $680 billion by 2025, up from $285 billion in 2018. And similarly, Bank of America pegs that the market for BNPL apps will grow 10 times to 15 times in the next 4 to 5 years. Bank of America pegs the BNPL value between $650 billion and $1 trillion by 2025. So what is BNPL? They are also called as point-of-sale instalment loans. The BNPL arrangements have been picking up and becoming an increasingly popular payment option, especially when e-tailing space is becoming prominent. By using BNPL financing, it can be convenient for consumers, but there are some potential downsides also associated with it. There are several, including Klarna and Affirm, which already offer Buy Now Pay Later financing on the purchases done from participating merchants. PayPal has also introduced its own BNPL program, and some credit card users, such as American Express, have also set up similar financing options. Are they like credit card EMIs? They both sound similar. They both involve delayed payments, yet BNPL is very different from making the purchase using a credit card. And when a customer uses a credit card to pay for things, you're only supposed to make the minimum payment due on the card each month. Interest gets charged on the remaining amount, which would not be charged if you have used a card with a 0% introductory APR, unless you pay it off in full. But you can carry a balance indefinitely in case of a credit card. In contrast, BNPLs in most cases do not charge interest or fees, but they have a pre-set out repayment schedule, usually several weeks or months, and the customer is told at the beginning what he or she will need to pay each time, which is usually the same amount. And this kind of financing is comparable to any other non-secured personal or consumer loan. So what do you need to check while entering a BNPL agreement? There are 4 important things that you should consider while you enter a BNPL arrangement. First, like any other financing arrangement, it is important to understand the repayment terms you're agreeing to, and also it is necessary to understand how your payments will work, which can help you to plan for them in your budget. Also, the borrower should keep in mind that while they may be approved for a 0% interest BNPL, that's not always guaranteed. And finally, consider return policies and how BNPL may affect your ability to return something you have purchased, and what are its pros and cons. BNPL agreements allow consumers to pay for things over time without interest being charged, and it's way easier to get approved for this type of financing, even with a low credit score. And since they are somewhat subprime in nature, these loans don't add to your credit card debt and affect your credit score. On the flip side, getting these loans and paying them off doesn't help you with good credit. A customer also misses out on any perks like cashback or rewards points that credit cards can offer. Thanks so much for joining us on this report. If you like this information, please like, share and comment on the video below, and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for regular updates and more information, please head to the website kalkinemedia.com. And this is Sage for Kalkine Media.